So I guess since I'm going first, I will introduce myself. I am Mandy. I have been with the firm for about 15 years. I started in the Chambersburg office and now I work remote from North Carolina. So I am presenting today from North Carolina. However, I will be traveling to PA later today. Um, so I do a little bit of everything, tax, accounting service, payroll, 1099s, sales tax, wherever I'm needed. So today I am going to talk to you about 1099 reporting mapping in QuickBooks. So I'm going to start with desktop because we found out that they have locked out our module in QBO. So we'll start with desktop, and it's kind of a similar process, but the screens look very different. So there's two steps to 1099 mapping. First, you have to have your accounts identified. And then you have to also have your vendors identified. So there is a nice little wizard in well, actually both softwares. There's a nice wizard. Let me see where the best place to get to the wizard. So since I guess let me back up a little bit. 1099 reporting, if you're not familiar, includes those vendors that you pay for services, and for 2025 year, so for the 2025 filing season, it's going to be those vendors that you're paying $600 or more for services that are providing to you, that are non-incorporated there's a few exceptions. But for the most part, it's those non-incorporated vendors that are providing services to you, that you are paying via cash, check, or ACH. That's important. And then, so there's two common forms. There's going to be your NEC and your miscellaneous, and that's what QuickBooks will allow you to map to. So the NEC is going to be all of your non-employee comp. And then the miscellaneous is like vendors that you pay rents to is going to be most common. So in QuickBooks, you have to map them both separately. And I think this file may have some mapping in, but I like to do, when I do go into my, to map it, to do show all accounts. Otherwise, it only shows you a limited selection. So we're doing the NEC. And you're just going to look through your account list. That's going to be where you might post those expenses that you're paying for services. Did this account reset?
While she's looking for that, just to answer the question that's in the chat, says if we purchase an item, not a service, do we need to issue a 1099? And no. So it's only for services. It's not for purchase of materials or any other items.
Yeah, in most cases, that's no. There is like some exclusion for goods and services on the miscellaneous. So we have our account mapping wizard. I don't think I wanted to do save and close there. I wanted to do, why is this wizard not working this morning?
While Mandy's working on that, we do have a couple more questions coming into the chat. The first question is, what if we use an auto shop and the invoice includes labor and material? Can we just cut a 1099 for the total? Simple answer there is yes. The next question is, I have interns in my practice and I give them a $300 a month stipend. Are they considered vendors? Yes. Those interns would be considered, another word you could use them for is subcontractors. So yes, because they are providing your business a service, they are considered 1099 eligible.
Okay, so maybe this is a better way to go into. So I went in, for those who didn't see, I went into vendors, 1099 forms, print e-file forms. It's like stopping me on the mapping part. So this is identifying the vendors that are 1099 vendors. Or this is identifying those vendors that you have marked in the vendor center as 1099 vendors. It'll highlight any information that you're missing. This should be, you're just going to go through and select, again, go through and select your 1099 accounts. Now it's letting me go through all the way. So view your included payments. Confirm your information, and there is, you can file them through QuickBooks. There are fees for that. So, but this at least identifies your vendors or identifies your accounts that are 1099 accounts. And then the second part of that is you go into the vendor center and you have to identify your vendor as a 1099 vendor. So if you go into your vendor, into tax settings, here's where you mark that they are a 1099 vendor. And then you would enter their tax ID here, and you want to make sure that you have their address in here, because that's why we were getting the red. It was glaring red at me. I can't type.
Another question that came in, 1099s must be cut for all attorneys. Do CPA firms fall into that category too? Yes. CPA, go ahead.
So attorneys is yes, even regardless of their incorporation status, their corporate status. Attorneys is going to fall under, or CPAs are going to fall under the regular 1099 NEC reporting.
And then the next question is, work done through Upwork Labor website building considered a vendor? Clarification question there is, are you paying Upwork Labor as a business, or are you paying the individual website builder? Either way, yes, that would be considered a service that is being provided. So if Upwork Labor is not incorporated, then yes, either way, it would get a 1099 if it's over the threshold.
How do I get this little Zoom thing to go off my screen where I want to go? All right. Now that we have our vendors identified and our mapping complete, I want to pull up my report, but I can't get to that. There it goes. So QuickBooks will provide a nice little report. So it's going to be under vendors and payables, and it's 1099 summary. So we did mapping for the NEC, and I'm pretty sure they are in this calendar year. Yeah. So here's what your report looks like. And then there's also a detailed report. I just want to point out that, because I made the comment about excluding credit card payments. And so, well, credit card payments, Venmo transactions, PayPal transactions, anything that is done through a third-party processor should be excluded on the 1099 NEC that you are responsible for reporting, for filing. Those transactions, those third-party transactions are reported on a 1099-K by the payment processor. And QuickBooks is smart enough, if you identify those vendors or those payments correctly, that it will exclude them from the 1099 summary report or from your 1099s. So there are certain instances, certain keywords, abbreviations that QuickBooks looks for. And you can see I was doing a little test here. So MC as MasterCard, it exclude those because that's a credit card. It will also exclude them if you're using the credit card feature module in QuickBooks, it'll exclude those. But if you're using the write checks feature, which is what all of these are, or we'll just go with write checks, it will exclude them. Debit card, so that's like your bank card that's tied to your bank account. It's going to include those. ACH, it will include those. If you don't have anything in it, it will include it. If you identify it as PayPal or Venmo, it will exclude it. A check number, included. CC, it will include those. So this is, it used to exclude like CC, but now it includes them. And then this is like a abbreviation for V for Visa. It will also
No,
include
because
those.
I have to get to it through.
Mandy, can you open up one of those checks and show them like where you're putting this information?
Yes.
Just so,
Yeah, because I'm actually going to change one of them. So, so if we look at the 1099 summary report, and I'm going to go into this vendor because this is where we have all the tests at. So you can see that it's including some of these notations that are probably or should be for credit card. So like this Visa one here. If you actually go in and type Visa, it's going to pull it off the report. So if we go back and put a MC for MasterCard, it's going to pull it off the report. So it's kind of important to like include, if this really is a credit card payment, it should be somehow identified as some sort of credit card payment or Venmo or whatever it is. Oh, okay. So it doesn't exclude Venmo. It should be excluding Venmo. That's interesting. I don't know if there's another way to abbreviate that. I guess that's something that we might need to look into on. Okay. I literally just did some research on this morning, and the Venmo transactions are reported in 1099-K by the processor. So I guess just something to keep in mind. So are there any questions on mapping or what is included, what isn't, what should be excluded? Did we answer all the questions? Some other things for 1099 related. 1099s are required to be filed electronically if you have more than 10 or more. And that does include your W-2s. So if you have 8 W-2s and only 2 1099 vendors, the new thresholds say that those 2 1099 vendors should also be, so that you take those two together and then everything should be e-filed. I think I did mention that for 2026, the reporting threshold for 1099s will go to $2,000, and then it's indexed for inflation each year after that. But for the 2025 filing, it is still $600. And obviously QuickBooks has not been updated yet, because I think when this report was under 2,000, it was still pulling everything through. It is suggested that you request a W-9 from your vendors every 2 years, just for updated vendor information. Addresses change, sometimes ownership changes and tax IDs change, but nothing else on the front changes. So that's just something to keep in mind too. Your W-9s can be saved right in the software, right into your vendor. So you can attach it right here. That's a good practice to do. You would just go out and find your file, or I think you can drag and drop right into here as well. So that's a nice little feature. So that is 1099 reporting and mapping from QuickBooks Desktop. Kendra, are you signed into online? Because I'm sure I got kicked out.
I do see a question in the chat. Is SEK doing the 1099s as an easy way to export all of the information out of QuickBooks? We did just send out 1099 emails. So if you have specific questions, reach out to the person that sent the email to you, and we can help you walk through that process if needed.
Yeah, the answer to that question is going to be different whether you're in desktop or QBO. Okay. So QuickBooks Online, you can just go to a vendor. So to identify your vendor in QuickBooks Online, you would go to edit, go to your vendor center, go to edit, pick your vendor, go to edit, and then scroll down. And then your 1099 tracking information would be entered right here. So similar concept as desktop. Enter your tax ID, click the box that yes, they're a 1099 vendor, and then confirm that their address is complete and the tax name is complete. You can also attach their W-9s right in their vendor setup. And click on that check. So some things that are important here for 1099 tracking in QBO. There needs to be the payee box needs to be completed. You can't just leave it blank or it won't pull to the report. There should be something where the check number is. That's where you're going to put your key identifiers. If it's ACH, cash payment, a check, again, MasterCard, if you're not using your credit card payments, if you're not using the credit card function module within QuickBooks. That way it tells it to exclude those payments. I think that was the areas to highlight there.
Really quick, I just wanted to go over here. If you are somebody, and this is not a problem, if you add your checks through the bank feeds window, of course, there is no pending one in here. Here is where you would go in and add the vendor to make sure that that vendor is included here.
Good point. So unfortunately, we can show you where to get to the module in QBO, but we can't show you the mapping in QBO because they have it down for maintenance right now. But it's going to be a very similar process. You would click the prepare 1099s and it's going to walk you through a similar wizard. However, say no thanks. This is as far as we can go because it is down for maintenance. But it's going to be very similar concept and mapping. You go in, you select your accounts. You're going to identify whether it's an NEC or a miscellaneous. Unfortunately, those are the only two forms because they're the most common forms that QuickBooks will allow you to map and track for you. You can do the mapping, but you do not have to e-file them through QuickBooks. You can, again, additional fees are associated to the 1099 filing. But you can still certainly, for those clients that, or for anybody that uses SEK to prepare their 1099s or to file their 1099s, it's still good to walk through this, have this wizard mapped and everything identified properly. Not a whole lot we can say in here on QuickBooks on QBO for the 1099s just because we're stuck.
May I ask a question?
Mhm.
So if you have your vendors identified as a 1099, we use QuickBooks Desktop. If you have your vendors identified under the, the tax ID information and checked as a 1099, in the report field, shouldn't you be able to pull a summary report of the vendors that way? Or am I doing something wrong? Because it knows that they're a 1099 vendor because they're marked that way. Like
Which
under
report?
reports for vendors and payables, there's a 1099 summary and a 1099 detail report.
Do you have your accounts mapped?
Mm,
There's two parts to it, identifying your vendor and mapping your accounts.
so that's why that's not popping up. Okay.
And there is a wizard.
Well, yeah, I think that but I have to be in single user mode, but okay, gotcha. So
Yes.
that is okay. I've got it. Thank you.
Yep. And you're just gonna go through and select your accounts that are gonna be, your service people heavy, janitors, accounting, sometimes advertising, repairs and maintenance is a big one. And also don't forget, if you have any kind of capital improvements on your balance sheet, that's account that is often overlooked. There could be potential vendors there. One that I always like to hit is miscellaneous because clients like to post a lot of things there and it's not sorted till later on. Legal fees for all your professional fees. Those are going to be your most common.
Thank you.
A few more questions that have come in. Can QBO file the 1096 as well as the 1099s? Yes. Kind of by default, when you're filing the 1099s, a 1096 will also be filed. The other question is, what is the difference between a vendor and a contractor?
Nothing
You
really.
guys can correct me if I'm wrong. Yeah, nothing. I believe QuickBooks makes that distinguishment by whether or not you have the 1099 tracking turned on, is basically all that I can find as to how those vendors get pulled over into the contract list as well. I'm assuming you're talking about here, the screen. We have the W-9s ready. They've all been selected for 1099 tracking. So I believe that is why they are getting pushed over here. Anybody else can join in if they feel there needs to be additional.
Yeah, I think with the contractors, you have the ability here to pay with direct deposit also. With the vendors, it's more so you're scheduling a bill payment with them. So your contractors can be paid, I think it says there within 24 hours. Of course, there's fees associated with that.
Yeah, and I mean, they're still identified as vendors in the little vendor setup. And then I believe Kendra's probably right that checkbox indicates a contractor. So
We did have, go ahead.
No, I was just saying they're one and the same.
Yeah. We did have a question come in related to this with the registration process. Can you make an electronic payment without having to issue a 1099 in QuickBooks Enterprise? We may need further clarification on that, but I believe what the question is asking is, can you make an ACH payment to a vendor without it being 1099 tracking? Simple answer is probably not. Like we said, unless you're doing, via Venmo, PayPal, or one of those others that are tracking. But if you're even making a electronic check payment to another person for a service, then it does need to be 1099 if it is over that threshold. If we miss the mark on that question, please feel free to say, wait, hold on, this is what I meant. I'm always confused with the state filing since I file through Tax 99. It will do the federal. Do we have to file with the state? We are a municipality. I believe, yes.
Yeah, if it's a PA vendor, yes, they should also be e-filed with the state of PA. And it can be done through MyPath.
Mm-hmm.
Are there any other questions? I haven't even seen the chat.
All right. As always, you guys can keep continuing to send questions. It's not like we're 100% done with 1099s. No more questions. But I will go ahead and move into the next portion of our webinar this morning. Have not introduced myself. My name is Kendra Barnhart. I currently sit in the Chambersburg office. I have been with SEK for 4.5 years now. Been using QuickBooks basically my entire career before I got here. So started out in desktop, didn't really know what online was till I started here, but we're making our way through it. I am going to discuss another hot topic that is happening right now in current events, the One Big Beautiful Bill Act. The best thing that has hit with zero information out about it right now, unfortunately. Before we get started, I did want to point out that SEK is hosting a webinar here on December the 2nd. That is 100% dedicated to all the updates throughout the One Big Beautiful Bill Act. That is going to be at 9 a.m. I believe Christina is going to include a link to join that webinar. Again, it is free, much like today's is, that you could attend. There will be 3 presenters going over not just the payroll 1099 aspect of it, or the overtime, I'm sorry, but all the other tax changes that are hitting that. So I do recommend everybody join that as well. Today, we are just going to focus on kind of the reporting side of that, which is the tips and overtime, kind of seem to be 2 of the biggest topics right now. Again, just want to preface this that we only know what the IRS has submitted, and unfortunately, that's not a lot right now. So we're just going to kind of give you guidance on what we have been told and what SCK's standpoint is on this. So don't hold me to everything is like, a Bible thing here. There might be more guidance coming out, hopefully in the near future. The first big thing we want to point out is that this year, at least for 2025 W-2s, the W-2 will not look different at this point. There will be no new boxes for marking these things. We're essentially guiding everybody to release a statement. We were talking before this, kind of much like the COVID wages. So what our suggestion would be is that this statement would include, like maybe a company letterhead or something that makes it official from your office, the employee's name, their social security number, and then either the amount of the tips or the overtime or both that need to be reported. We will start with the tips. Again, this is effective 2025 through 2028 so far. The qualified tips are voluntary cash or charge tips received from the customers or through tip sharing. The other important thing to note here is that they must come from an occupation that is customarily and regularly receiving tips before 12/31/2024. So you can't be a landscaper saying that you received $25,000 worth of tips when prior years those were all invoiced chart wages. So that's just kind of, saying, so any of like your hairstylists, your waitresses, a normal tipping career. The maximum annual deduction so far is $25,000 for self-employed people. I don't believe we have any of them, but we'll just go ahead and mention it. The deduction may not exceed your net income. So that basically just means you can't report that you made $20,000, but you had $25,000 worth of tips. So that math has to math. This deduction does phase out for taxpayers with modified adjusted gross income of over $150,000 or $300,000 for joint filers. The deduction is available for both itemized and non-itemized taxpayers. Again, just going through my notes here. Another thing we wanted to point out that this does not include auto gratuities. So everybody loves when you go to a restaurant and there's the automatic 18 to 20%. You are not allowed to claim those auto gratuities. We do recognize that not many people keep those separated, but just know that you probably should if you do not currently. Final thing we want to mention for tip reporting is there has been a lot of conversation about what they're calling TTOC codes. Those will not be required for 2025 reporting. So just kind of keep that in the back of your mind for when the new W-2s come out in 2026, that there will be some sort of box or location within each employee setup where you can put that information. We did reach out to our Intuit rep, and unfortunately we were basically told we don't know yet as far as where all of those updates are going to be coming from. So again, all I can suggest is that you sign up for our emails and just kind of stay up to date as much as you can. Hopefully we have more information closer to the end of the year. In my opinion, you don't get much more closer to the end of the year than we are now. But just know that we are keeping an eye out and will spread the word as soon as we can moving forward. The other big part of this, which affects a lot of people, is the no tax on overtime. Maximum deduction is going to be $12,500 for single, $25,000 for joint filers. And again, the deduction does phase out for taxpayers with the adjusted gross income over 150 and 300,000. Again, we do suggest having a statement with this information. Doesn't have to be anything super fancy, just, you know, the lines of information to go along with the employee's W-2. We did have a lot of questions on how to properly calculate, mostly because everybody thinks, oh, I'm getting no tax on my overtime. That means no tax on the, you know, year-to-date overtime wages on your pay stub. You are only getting the tax break on the 0.5% of your overtime. So only the half of the time and a half. The easiest way to configure that would be to take your total overtime wages and divide that by 3. And that is going to be what is considered tax-free. My Excel number brain would suggest that you take the year-to-date payroll summary for all of your employees, just do that overtime wage and run a formula, you know, overtime divided by 3, and that'll get you that number. Looking at, is there any questions? Does QuickBooks Desktop compute this correctly? If you're, are we talking tips, or I don't know when that question came in, or overtime? If it's overtime, I'm going to say no, simply because it's not going on the W-2 this year. So QuickBooks does not have a reason to calculate that 0.5%. So it is going to have to be something that is done manually by whomever is creating those W-2s. Who can we contact at SEK to get instructions for filing 1099s? All 4 of our emails will be included on the email that Christina sends after this. So you can contact any of us or whomever you regularly deal with at SEK.
I put a link in there and some additional guidance using MyPath. I have done it, I think, once. But I think when it is all manual entry. And once you're in there, it's pretty self-explanatory. Like once you get to actually where you go enter it, it used to anyway, kind of look like a 1099. So, but but that link will at least get you started and guide you where to go once you're in MyPath. There's not a way to upload a file into MyPath that I am aware of. I think it's going to be all manual entry.
This question here is stumping me. If you have an employee that gets double time for overtime on special days, does that mean you get half? I do not know if there's any guidance. Emily's shaking her head like she knows the answer, so I'm gonna let her go with that.
I think that what they had said is anything over and above what your regular rate of pay was. Okay. I believe is how that was worded.
The next question is, no tax on overtime starts in 2026. No, you do get that for this 2025 reporting period. So that statement will be generated today. The actual W-2s will change in 2026. But when you print your W-2s at the end of this year, they're going to look the same as they always have. There has been some discussion about the information going into box 14, but for a lot of employers, box 14 is already getting kind of full. So essentially, that's why we're saying the IRS guidance was any reasonable method to report. So that's kind of why we're saying just doing a separate piece of paper as kind of a statement for those amounts, so that number doesn't get lost in the reporting process. Again, I wish we had more information on this topic. You know, it's kind of one of those things where like, hey, this is great, this is beautiful, but very little guidance as far as year-end reporting goes. So we just want to make sure everybody's up to date. And like we said, here in 2 more weeks, hopefully there's more information that we can provide in our next webinar.
getting back into it here. Just to introduce myself quickly, my name is Emily Beecher. I've been with SEK about a little over 5 years. I'm kind of a similar role to Mandy. I do payroll, bookkeeping, tax returns, this and that, and whatever they need me to do. So glad to be here. And I'm going to talk about some year-end best practices for payroll specifically, as long as I didn't get logged out here. There we go. Okay. So just a few things to keep in mind for the end of the year. Sorry, I'm just reading the comments here real quick. Okay. Okay, so before we get into that, Jennifer, tips and overtime. On our letterhead, we just include with their W-2 the total amount that is the overtime and the tips. Yeah, the overtime will be divided into 3 to get the total of that. Yes, so the 1660 would be reported on the statement. Yeah, that's correct. Unless they have like a double time, then it would be half of whatever that double time line is.
And if I believe even if they are using the standard
The standard
deduction, that they
deduction.
still get that amount. So it's for people who do use the standard, or it's for people who use the standard deduction or not. So and then also want to point out, Robin, the template that you download off of MyPath, my suggestion is you keep it from year to year once you get it, because you are not alone in the difficulty. Everybody struggles with that. So I have found that I just keep it as a template and then go in and change those numbers from year to year. Because you're exactly right. Punctuation, every little thing. And then when they give you that error report and you have to count all the little, it drives us all crazy. You are not alone. So my suggestion is you keep that text file and just use it year to year, especially if you have the same vendors over and over again. But yes, you are not alone in that struggle.
All right, now just to kind of get back into it for year-end best practices. So one of the things that we recommend is checking social security numbers and addresses for your employees. Something I would recommend is reaching out to your employees and saying, hey, please look at your last pay stub and tell me if the address on there is not your current address. You'd be amazed how many times people move and forget to tell you about it. So yeah, just kind of double checking too, if you have your, if your social security numbers are listed on your pay stubs as well, just making sure you're verifying that all that information is correct for year end for the W-2s. You'll want to confirm quarterly returns have all been filed for your first 3 quarters, and then for your 4th quarter, make sure you're not getting any rejections or any notices about not getting things filed. A couple of things to consider for your year end and like your last upcoming payrolls of the year. So things that you'll want to consider putting on your payroll for your W-2s are your fringe benefits, which would be any shareholder health payments that were made by the company. Those get included on your on the W-2s for your shareholders. Personal use of company car, making sure those amounts are captured so that the taxes are paid on those and they're included on your W-2s, any other type of taxable fringe benefits. And just a heads up that in desktop, in the past, we had been able to kind of go in and backdate those into the proper year, but in QuickBooks Online, you're not able to do that. So you're going to want to make sure you're getting that information early and getting it included on your last payroll in December so that the taxes are taken out correctly and those amounts are included on your W-2s. So then a couple of things to keep an eye on. I was having trouble getting into the sample file. It's giving me fits. Let me share my screen. Okay.
While Emily is working on that, a question came in. Do we have to report the overtime value to the IRS? I'm assuming you mean from an employer standpoint. As far as I know, no guidance has come about on how the employer is to handle that. It is by default included in the W-3 that you have. My assumption right now is that because W-2s are not changing, there will not be anywhere for us to put that information on the W-3. So I would say, unless further guidance comes out from an employer standpoint, no, we are not reporting the overtime any differently. No statement needed from an employer standpoint.
So a few things that you will want to check, and I had to jump in the other sample file because the one that we had was not working for me. So I don't have any PA employees set up specifically. But for your PA employees, you'll want to make sure that that PA local code is entered. So in your payroll information for your employees under taxes, under the other, there will be, so you're, oh, I guess, yeah. So for PA local, oh, it's not letting me, but this print on W-2 as box, you should be able to fill that out. That is the, normally what we use is the first 2 digits of the locality that the employee is being reported to. So in a lot of cases, we're Franklin County, so that would be 28. So you want to put print on W-2 as 28, and that will put that code on the W-2 for your PA local employees. So you want to make sure that that is filled out. Also, for your payroll information, if the employee is covered under a qualified pension plan, even if they're not contributing, but they're still considered part of the plan, you'll want to check that box. So that box 13 on your W-2s is checked for them. Again, that's regardless of whether they're contributing to the plan or not. If they are considered part of the qualified plan, which is something you can find out from whoever your broker or whoever manages your plan, they can give you a list of all the employees that are considered covered by your retirement plan. Just so 2 things there. Keeping employee files cleaned up. Oh, let me go back before that. So the local codes for PA, you're able to update in desktop. In online, it doesn't give you an option. It will just be based off of however you list your employee with their local taxes here. So in your tax withholdings, it will show the locals here. It'll be based off that PSD code that's saved there. Again, it's something that QuickBooks Online will automatically put on the W-2 for you. That's not something you're able to change there, unfortunately. So just making sure that your employee lists are cleaned up every year. As soon as you put a date in, I guess I could have stayed in there. As soon as you put a date into the employment details, when you change it to terminated, it'll ask you for a termination date. That will remove the employee from your active employees list in QuickBooks Online. Can you see the online, or is it only the desktop? Of course not. I'm actually in the online file, but I can't figure out how to share that, so it's fine. Flipping back and forth here, apologies. Okay. So again, I was just talking about if you are in your employee details, you change it to terminated and put a date in here, it will remove your employee from that, from your active employees list. So that will keep your list in online cleaned up. If you are going to the, I don't know why it won't let me switch back and forth between my screens for my sharing. Does anybody help me out here?
Share your screen and not your window, if that makes sense.
It's not. Oh, entire screen. Okay. Here we go. Okay. Thanks, Deb. You're my hero. Okay, so if you're in your desktop and you are in your employee, under employment info, if you put a release date here, that will stop the employee from showing up in any of your like scheduled payrolls. It shows that they're terminated, but it still leaves them in your employee list. So if your employee list is tons and tons of people that no longer work for you, I usually wait until after W-2s are done in case there's any kind of, specialized reports that I need to be able to search for certain employees. But after that, if you right click on the employee and do make employee inactive, it will remove them from the list. So this helps just kind of keep everything cleaned up. You can see all your released employees. If you do all employees, it'll just show here that you had made them inactive. That's just a good practice to keep it cleaned up, to keep your data cleaned up. And something we tend to look at toward the end of the year.
Question from Cheryl, does marking an employee, another question came in and threw me off. Does marking an employee as terminated affect their W-2? No, it does not. No. QuickBooks is essentially looking at wages paid, not necessarily at employment status. And then if you have someone that goes from an employee to a contractor, do you need to do anything to change them in QuickBooks Desktop?
Don't do that. Usually the IRS gets unhappy if you have someone that has a W-2 and a 1099 in the same year. So chances are if they were an employee, they should be an employee. But if for some reason they do change between the two, you would have to create a vendor for them to track those contractor payments.
And then I will preface that in saying that then you need to be very, very careful whenever you're writing a check to them, that you are using the vendor of their name versus their employee in that list. So just be mindful whenever you're selecting that. And it will, whenever that drop-down box comes up, say to the right of their name, whether it's a vendor or an employee. So just make sure you're tracking that appropriately.
And that's a good one too. Whichever one you're not using, you should probably make inactive if you're not going to be using it anymore. That will avoid a lot of that confusion. But again, there shouldn't be too many situations where that happens. But yeah, if it does, you just want to make them a vendor. It won't let you use the exact name that you have as the employee. So you might even consider putting like a V in parentheses at the end of the name, just so there's the differentiation there as well. A couple of other things to consider with your year-end payroll. If you're going to be giving gift cards or cash as bonuses, those do still need to be recorded as part of payroll and taxed appropriately. Just because they are not run through the payroll module does not mean they do not count as compensation. So if you're giving employees $100 gift cards, you will still have to run those through payroll. Same thing if you're giving cash bonuses, those still have to be run through payroll as well. So that is something else we want to talk about is bonuses. So net to gross, the difference between those type of bonuses. So if you do give someone a cash bonus, and in here, and you need to record that. I don't know if they have a bonus set up. So we don't need regular, we just need bonus. So if I gave Duncan $100 in cash, we want to check down here this enter net calculate gross. Because you gave them $100, that's what you need your ending check amount to be. And if you put that 100 in here, it's going to calculate what the actual gross wages should be. Bonuses, you'll want to take off any other deductions, health insurance, 401k, depending on your plan. Some plans do include bonuses. But take off any of those like health insurance type deductions, any other type of things, because it's basically just going to be taxes. Since I took that health insurance out. So whatever amount of gift card or cash that you had given, you're going to want that to be your ending check amount. So then you would just save that, run that through. If you have direct deposit enabled, make sure you're unchecking the use direct deposit box, because you'll just want to record it as a payment and not submit it through direct deposit. This is true as well with cash bonus, like check bonuses, or if you are going to run it through direct deposit, you can still use the enter net calculate gross if you want to give the employee a specific amount as their net bonus, or you can put in here that you are giving them a $500 bonus. Okay. And then take the taxes out. So again, that depends on the structure of the bonuses, depends on the company. Some like to give the net, some like to give the gross. But again, if you are handing out cash, it has to be, the net has to match what you're giving out as cash or gift cards. So that's desktop. Online, there is, under run payroll, there is a bonus only option. If you have commission available and you have other fringe benefit things, there will be different drop downs for those, but to do the bonus. So here again, it'll give you as gross pay or as net pay as an option. You can add a pay period, but you don't have to. So here's if we're using that net pay. So let's say I gave someone, $100 in cash. I want to use that net pay. Okay. Simplify. So you'll put your net pay in here, and then it will calculate the gross pay for you.
Emily, just real quick, the reason that those are coming up, like you can see the 4 employees there, you do have to have a bonus pay item in there set up before you do this.
That's what I had a note about that. Yes, so in online, you have to have the bonus item actually added to the employee's setup for them to be able to get that bonus. So that would just be in their setup under additional pay types. And you can add that bonus type there.
There's a question about giving employees gift cards for their birthday. Yes, technically they should be run through payroll always, anytime it's an employee.
Yes. And then just another note in the desktop, to be able to run the net to gross calculator, the bonus has to be set up as a bonus payroll item. It can't be like a salary or hourly item. So when you're setting it up, you'll want to make sure you choose the actual bonus type when you're setting that payroll item up, so that it does the net to gross correctly. Okay, so the last thing that I'm going to talk about today is unemployment rates. Yay. So you'll want to, toward the end of the year, I don't know, does Pennsylvania send letters out normally, or do you just log into probably the easiest way to find the new rate is to log into your PA unemployment site. But yeah, they do send the letter.
I think they're just
I have actually
site, like,
no, they send letters, because the client literally just sent me theirs yesterday. So
okay.
letters are going out. Yeah.
Is that a settings in there? You see, I don't know. Maybe. I just always get mine by logging into the usage. Client doesn't send them.
Yeah. I do believe that there is a setting that you can either select paper or electronic or both.
Okay. So again, logging into your PA unemployment website, or if you're in Maryland, logging into your Beacon website. Once you've gotten your new rate for 2026 or the new year, if you go under lists and payroll item list, and then find your, again, I'm in, California here. So if you double click and click through, it will have here for your next year. This thinks we're in 2026 already for the sample file, but you can put that updated rate right here for your new year. And then once the new year does roll around, I believe it should fill that rate in for all the 4 quarters following. So that is a nice way to be able to put that in early. So when you're running your first payroll of the new year, it's going to have that correct rate for your unemployment. Again, I think Pennsylvania is pretty good at providing that. Maryland, on the other hand, has not been so swell with that. So they, you can sometimes see your rate update in December in Beacon. They did have a thing a year or 2 ago where they gave you a rate, and then after the first quarter returns were filed, they changed your rates. So Maryland, I'm sorry, but Beacon's not our favorite. So that was in desktop. To change your rate in online, you go up to navigate to this top settings bar, and under your payroll settings, you'll find your state that you need to change. And then you'll be able to edit here what your rate is. Okay, great. And then you'll be able to choose an effective date. So you'll be able to start it as of the new year. So you can put the new rate in. So that will not change what your current rate is for this year in case you do have any new employees start at the end of the year. But it will be effective as of the date that you select. So again, as you're kind of winding down the end of this year, just one of the things to think ahead to make sure you're prepared for next year. So are there any other questions?
There is no threshold for gift cards. So technically, if you are giving an employee a gift card that was paid for with company funds, then it should be recorded. And if you are unable to get your PAUC or your Maryland unemployment, as long as it's within the first quarter, I believe QuickBooks is pretty good at adjusting those wages and everything and adjusting those amounts. If it gets after the first quarter when that is updated, then it does get a little wonky on that.
All right, that's everything I have for today. So Deb, we'll turn it over to you.
All right. Hi, everybody. For those that don't know me, I am Deb Redding. I work with our Hanover and York clients, and been with SEK for 25 years working in the accounting service department. So bookkeeping, accounting, payroll tax. That's my specialty. I do a lot of QuickBooks training, QuickBooks setups for the files and conversions. So that's kind of what I do here at SEK, and what I'm going to talk about today with you guys is the year-end books cleanup. So we all want to make sure, right, that our files are in order for the end of the year before we send everything over to the accountant for taxes. So with that, just want to kind of give you a few tips on things that you can do throughout the year and at year end, so we can make sure everything's all cleaned up. The first thing that I have here, can everybody see my screen here? Okay. We always want to make sure that you're reconciling your bank accounts, your credit cards on a monthly basis. This is going to help you confirm that all of your bank activity has been entered in. So it allows you to make sure you're capturing all of your expenses that have gone out. And it allows you to review the activity, for each month. And again, I can't stress enough to do it on a monthly basis, because when you get to the end of the year and you haven't done your reconciliations for several months for whatever reason, obviously it can be time consuming and frustrating. So if we're keeping on top of it, that's what we want to do. The other thing I want to mention is I know sometimes specifically for credit cards, you will have several employees with credit cards. So if you have that main account that all of these statements are coming in through, and then you have your sub accounts for that, you always want to make sure that you're reconciling that main account, and kind of ignore the reconciliation, if you will, for those subsidiary accounts, because those are all rolling up to that main account anyway. Reconciling also allows you to review any outstanding transactions, to avoid discrepancies, having duplicated expenses. And then again, of course, at the end of the year for the year-end reconciliation, you just want to make sure all of your accounts are reconciled before sending it over. So I'm going to switch to QuickBooks Online here for you, just to kind of show you some tips and tricks for that. Can you guys see my QuickBooks screen? Okay, I just don't see the green bar around it. All right, so first and foremost in your file in QuickBooks Online specifically, if we go into the bank transactions, the first thing you want to do before you reconcile each month is to take a look at the activity that's down here. If there's something sitting in here from a prior month or the current month you're working in, and the date is September, obviously that's not recorded in your system, right? So you want to make sure that you are clearing everything out in here before you even go to the bank rec screen. So there's a transaction in here for a deposit. It's saying that it matches, so I'm going to go ahead and just finalize that match there. So once we know in QuickBooks Online, again, that all of this activity has been recorded, we can simply go to the reconcile screen. And you can get to that by the gearbox at the top and reconcile. And I'll just show you another quick way. You can also go to, if you're in the check register, you can click the reconcile button up here. This information, it went right into the reconciliation screen. You're going to first come in to enter your ending balance and things like that. I've already started this particular one, so let me show you the savings account. So when you come into reconcile, it's going to show you what your beginning balance is, and it will also show you if something has changed from the period before. If a transaction was deleted or whatever the case may be, it'll say your balance is off. You can't ignore that. You have to fix it. This is also in desktop. It will show you a difference from your beginning balance that you should always research before you start the new reconciliation. And then you can enter your statement ending balance and the date, as well as any service charges or interest on that particular account. I'm going to go back to the checking account. I'll resume reconciling here. So I've entered in my ending balance. Take that off for a second. And with QuickBooks Online, if you've entered all of your activity in the bank feeds and accepted it all, that means all of your transactions that you've been categorizing throughout the month and matching are already going to be checked off on the screen. And if the worlds all align, your difference is always 0, right? That is what we're looking for. We're looking for a difference of 0 here. Great, fine, let's finish it. But I'm going to stop you there, because we always want to make sure to look down through and question, why is this transaction, first transaction here, not checked off? It was from 2024. So that obviously there's something wrong with that. So you want to take the time and make sure that you're going back through and looking at the detail for that transaction. In this scenario, I'm thinking First Energy, right? That's my electric company. I've paid them since September. So this has to be something that is old. And in that case, we want to go into the vendor center, and I'll just show you that real quick. If we go to First Energy, and we have our transaction list for the history for them, we can see here that we did pay them twice, right? So we already paid them. And in this scenario, it was a transaction from 2024. So I want to remind you also, and we'll talk about this a little bit as well. When you have a transaction that is old from a prior year specifically, you don't just want to delete that transaction. You want to make sure that you're doing journal entries to clear it out if that is the case in this situation particularly. So keep that in mind always. If you have old transactions that are in your reconciliation screen and they're from a prior year or even a prior month, if you are a business that presents statements to the board or whoever else, or if you have, compiled financial statements, anytime you're deleting something is going to change the reports that you have published, if you will, in prior months. So always keep that in mind. Another scenario down here that I'm looking at, $2,500 wasn't deposited. Why wasn't it deposited? You just kind of have to look at that information and go back and see what the issue was there. So don't ignore things that aren't checked off. Those are the things you actually want to pay attention to as you're going through. I'm going to leave this for later. So let's say we've reconciled our checking account and now we want to move on to our savings account. And we want to put our ending balance in, 67 for all of you. People with children know what 6-7 means, or maybe don't. See here, put our ending date in here of October 31st. And then again, any service charges or interest, and you want to start reconciling. So in this scenario, our bank is not connected to QuickBooks Online, so nothing is checked off. So in this scenario, kind of mirrors your desktop version. For those that don't have bank feeds connected there either, you put in your ending balance, and then you have to physically come in here and start checking off your transactions. And hopefully at the end, you get your difference of 0. Obviously, if your difference is not 0 and you don't have anything left to check off, you want to make sure that you're looking at the statement and seeing what transactions need to be added in. So again, making sure there's no outstanding items, making sure everything's entered in. And when you're finished, you can click the Finish Now button. And you can view your reconciliation reports here as well as in desktop too. A screen will pop up for you.
Deb, there's a couple really good questions here I want to make sure we touch on.
Yep, go ahead.
If you are journaling out those old transactions and they're in a prior year, what would you date the journal entry? Current month or the prior year?
You want to date it the current month, again, because if you date it the prior year or prior month, you're changing activity for that time period. So you want to use current, and then in your reconciliation, after your journal entry is entered in, you will then have another entry in here where you can check off this payment, and you will also check off that journal entry that you entered in. So they will offset each other.
Yeah, you'll have a very angry accountant if you do prior year.
Yeah.
Next question was, there are some old transactions dated years ago in our QuickBooks. I have contacted several companies to whom they were believed to have been written. I'm finding out that they were paid by credit card and should have never been entered into QuickBooks as separate entries. However, some are listed as being paid to governmental agencies. How do I clear these? They have no records for us, as they are so old.
I mean, it's kind of the same situation, right? If they didn't exist, right, and anybody else can jump in here too. If it truly wasn't a transaction that happened, then they need to get off of your books. So you would have to do that journal entry that we just talked about to be able to clear them out of your books. And the journal entry pretty much is going to be debiting your bank account to put the money back in QuickBooks. And then your offset is normally going to be whatever expense you had posted the time before, because technically you took that expense in prior year and you really shouldn't have. So now you have to reduce that expense with this journal entry. Does anybody else have anything to enter or any?
Just wanted to add that the reason that is, you know, like, just as Deb said, you claimed that expense in prior years. So unfortunately, it doesn't matter whether those agencies have record or not. You as a business still claimed those expenses. So now you have to essentially back that out in current year.
Is there anything else, Kendra?
No, that's it for now. Everybody else seemed to really enjoy your 6-7 joke though. So good job.
I would love that, or not, I'm not sure. One other thing to keep in mind, we're not just reconciling the checking and the savings. We want to scroll down here to our credit card, obviously, and make sure that we are reconciling that as well. Again, if everything is matched in QuickBooks Online, everything should be checked off here. If not, we want to simply go in here and make sure that we've cleared all of the activity. Again, same thing in desktop. The only thing is in QuickBooks Online, it actually will check them off for you. In the desktop version, you physically have to go down through and check them off. There are a couple tips that I have for the desktop version and this version too. When you're in the reconciliation screens, remember that you can sort by different columns. And go back to the checking account since there's more activity there. For example, if you're looking for something specific, you can simply click on the column heading to sort by payment and it'll sort in order for you. You can do the same with the deposit side as well. You can actually do the same with the payee. So again, if you're looking for something specific in reference to your bank statement to finalize that or find the one thing that you've overlooked, just remember that you can sort by columns in either desktop or online.
Yeah, I like too the different tab, like you can select only to see the payments or only to see the deposits there at the top too.
Yes, right. Yeah. So only view the payment so it doesn't jumble up and it have all that activity if you have large accounts, or you can just see the deposits. Correct. The one thing that I do also want to mention is I know in the desktop version, if your difference is not 0, you can still force the reconciliation. I highly recommend that you do not do that. Doing that will create an expense account called unreconciled differences, and it basically just puts it in there to force the reconciliation, but you're basically just ignoring something that's missing or something that's off. So if you can't get your difference to 0, I've done it before, step away and come back later, and a lot of times it will be there the next time you come in. So just a tip there. Are there any questions on the reconciliation piece?
Deb, there was a question in the chat. My bank merged with another bank. During the transition, my account was disconnected, and when I reconnected, I lost all the transactions prior to the merge. I see the profit and loss statement includes amounts for the entire year, but I do not have all the transactions. Any recommendations?
That was a lot. I have to look at that in more detail to read through it. Kendra, if you had time to think about that.
Yeah. My suggestion would be is the easiest, I think, is if you still have access to that old bank website. If you can go in, a lot of those bank websites allow you to download transactions, whether it be a CSV file or what have you. You could download those and then import them into QuickBooks Online. And then Deb, this is probably also a good way to show how to do this. You could even, if you have those old statements, you can even import a statement now into QuickBooks Online, and it will bring those transactions in that way. So if you have either paper statements from the old bank, or if you're able to go into that old bank's website and download those transactions, that would be my suggestion.
Yeah, so what Kendra's talking about here is importing the data. So from the gear settings box up here and import data, it's going to ask you what you want to import. You're importing bank data. And when you select the import button, it's going to give you options. Which bank account do you want to bring information in for? Simply choose that. And QuickBooks now has the ability to drag and drop your PDF statement, like your bank statement, drag and drop, or you can upload it from this device to browse to it. It does CSV files as well, pictures, JPEGs, things like that. I don't have one that I can show you to bring in at the moment, but again, if you drag and drop into this, what's going to happen is it's going to bring up a picture of that PDF or that CSV file, and it will basically put in a line for each item that is on that bank statement. And at that point, you can enter in the expenses, you can confirm like the amounts are okay, and then click an import button, and that will bring in all of the information for you. So it's a quick way to, if you're not connected to the bank feeds and online version, to utilize that feature. So it's not manual entry that you're doing.
Isn't AI great?
Sometimes.
Yeah. Yeah, that's one way that I think that AI and QBO has come tremendous leaps and bounds over the last few years. That's a huge time saver.
For sure. Especially if if you haven't reconciled right for months and you have to get all of your data in, or even if you're still, using your shoebox or your Excel, and, documents or spreadsheets, and you want to start using QuickBooks, it's a great way to quickly get the data entered in. All right, we're going to move on to effective accounts receivable and accounts payable cleanup. Obviously, it's important to maintain accurate financial reports and records. Regular cleanup of your receivable and your payable, keeps everything up to date. Make sure that you're not missing anything or you're not missing getting paid. So it's very important to review those AP and AR aging reports, just to view and make sure things are up to date, make sure there's nothing strange that's happening, which will allow us to, for AR, maybe write off some bad debt. AP, could be duplicate entries, and things like that. So let me switch back over to, again, I'm using QuickBooks Online. Desktop is pretty much the same, just looks different. So on my homepage here, I do have it set up to be right in front of me, my accounts payable and accounts receivable. So it's just a quick snapshot every day that I can kind of look and see what's happening. But to really drill down onto the reports, again, desktop or online, we want to look at let's do accounts receivable first. We'll look at our accounts receivable aging as of today. And we have a couple of things going on. Looking down through, something's going on with Alice, right? We need to figure out what's going on with her. Bob's good, right? He still hasn't paid yet. And Carol has a zero balance. So why are they showing up there? Technically, the only thing I should really be seeing here is something for Bob Brown. So let's look, let's talk about Alice. And if we look at her invoice here, we can see that it's old. For whatever reason, let's figure out, or we come to the determination that she's not going to pay, right? So if Alice is not going to pay this, what we need to do in order to clean this up, again, we don't want to delete it, right? Because it was from a prior period. So we don't just want to go in and delete the invoice. We want to create a credit memo for her in order to clear out her amount. And how we do that is up under the create and then credit memo. And your credit memo will come up on the screen. Who is your customer? What date is the credit memo? Again, kind of talking before, we're using a current date, not the prior date. And we're writing this off. Let's pretend this was an invoice from 2024. And that is why we're writing it off, right? Because we recognize the income in a prior year. And now we don't want to just reduce our income. We want to record it to bad debt. We choose our item of bad debt. And this was a taxable item. It was originally $500 taxable. So this all comes down to $530, which is what she originally owed us, and that's what we want to clear off. And I don't know, Mandy, your sales tax, if you want to stress the importance of doing it this way and not just, doing it for $500 and, current month.
Well, if you don't do it this way, you're going to essentially have paid sales tax that now you have refunded. So in order for your reports to come out properly for the next period that you're going to pay, you want to make sure that you're using the right items and you're identifying taxable, non-taxable correctly, because QuickBooks will adjust your reporting.
So in QuickBooks Online, when you're creating a credit memo and you hit the save and close button, it will automatically, or it should automatically, apply this credit memo to Alice's outstanding invoice that she had. And in this case, it doesn't, because I made it not so I could show you how to do it. But normally Alice would be gone now, right?
I
Because
think there's a setting, Deb, that you have to have turned on for it to automatically apply up
Okay.
under your settings.
Okay. Do you know where it's at? I'm
trying to. I can't remember if it's here or if it's on the advanced, but there's somewhere that says about like auto applying, because I think it applies to vendor credits as well.
Yeah.
There.
I think it's under auto, yeah.
Yeah.
So right here it's under advanced automation, so automatically apply credits, for bill payments or for your customers as well. So it did do that, but I took it off so I could show you, because now again, if we go back to the report, AR aging report, we're still seeing her here. So what we need to do is just take a next step and say, it might sound weird, but let's receive a payment. And we'll choose Alice. Today's date. We can see here is her invoice and it's automatically selected. And we can see down here was the credit memo. So basically at the end of the day, we're clearing out this invoice with this credit memo, and the amount that we received is $0. And it's simply a record and close, and then her receivable will go away, her balance will be 0, and she'll be off our list. So that's the easiest way to work through that. If we're looking at Carol here, again, let's take a peek at this. This looks like this was a journal entry from before. So again, she's an in and an out. So in order to just clean things up, we want to go into receive payment for Carol, and we should have our journal entry here and our offsetting journal entry here. So again, this could be an invoice, this could be a credit memo, record and close, and now our accounts receivable aging list is where we want it to be, and we're comfortable with it that we know Bob is the only one that owes us money. So that's kind of the process with that. Does anybody have any questions about AR? If not, I can move on to AP. All right, so let's pull up the accounts payable aging summary. And we have in here a couple of transactions, and we know that these are, actual transactions that are coming, but this ABC landscaping has a 0 here. Let's take a peek at that. Again, just clicking on it. Again, this is the same thing as desktop version as well. And this is the same scenario. There was an expense entered in, and then prior, and then later, it was reversed out. So in this situation, let me go back into pay bills for this. And we will look for ABC landscaping. And if I simply click on ABC landscaping, QuickBooks automatically knows again from that setting that there's a credit. So my open balance was this, I'm applying my credit, and I'm saving and closing it. Here to see it's an account. So that should take care of that. We'll refresh. And now you can see our 0 is gone from there. But let's take a look. This 125, again, kind of this, think about the same thing. Why is this still out here? I know I paid them, so why is it still here? You have to kind of go and research that. So if we go into our vendors and we go to ABC Company, I'm just clicking on them to bring up their transactions. And I'm looking down through here. I can see here's my 2 transactions that are both $125. Well, I have a bill entered in, but I also have a check entered in for them. So that tells me that this expense is duplicated because one, I entered a bill, but I never paid the bill. I just simply wrote a check for it. So that tells me that I need to come in here to this bill and I need to just completely remove this. I'm looking at the date. It is, the current year, current period that I want to be in, and I can simply just remove this bill. If it was from a prior period, again, you'd have to go through the vendor credit like we did with the customers. So if I delete this because I know it's a duplicate, I know I don't want it in there, I can simply get it out. And then if I go back to my reports, that should be cleared up from there. And all that we have left is Happy Maids and SEK. So, and I know that I still need to pay them, so that's good for our list there. The other part of accounts receivable and accounts payable is duplicate vendors, even duplicate customers. So let's just talk about that real quick. If we go into our vendor center, this is something that you want to do every so often, right? Especially, if you want to keep your books clean and whatnot, you have to pick the time that's good for you and your year that works. But basically what I'm doing is I'm going to my vendor center and I'm going down through all of the companies and I'm just making sure, hey, I don't have any duplicates or something doesn't look off. And here's one that looks off, right? So we have SEK, CPA and Advisors, and we have Smith Elliott Currents and Company. So obviously they are the same vendor. So I need to decide which one do I want to keep. Let's say I want to keep the SEK, CPA, and Advisors, and I want to get rid of the Smith Elliott Kearns, but this one also has transactions in it from past. The best practice that I normally follow is to make sure that I'm copying word, letter by letter, what I want it to be. So I will go in and I will edit, just so I make sure that I am copying, again, letter for letter, the name. So I'm doing a copy from here. And I'm going to close this. And then I will find Smith Elliott Kearns. And I will edit this. And I will make it what I want it to be there. And I will click the Save button. Once I do this, it says this name is already being used. Would you like to merge the two? And if I simply say yes, it will put all of the transactions together under the one that I want. So that's the easiest, most efficient way, I think, to merge vendors. Again, you can do the same thing with customers as well. Sometimes you have middle initials and sometimes you don't. So if you're finding that that person is the same, you can do that in the customer center as well.
Deb, along those, go ahead, Emily.
Go ahead.
Along those lines, question here in the chat. I have vendors that have merged and or changed names. Should I just edit the original or create a new vendor?
I mean, I think that is your decision, really a personal decision. I normally would probably just change the name because it's never going to be whatever the company was before. So if you're looking for something, down the road and you're trying to search for the new company and the old one's in there, it's creating a mess if you have to go back and look for transactions.
I
That's
will
just-
caution on merging if it is a 1099 vendor in the middle of the year. And like that they've changed names.
Do you caution that because it could be a completely separate EIN number? So in that instance, I guess when you do get a new name, you should be sending out W-9 forms.
They're
for-
gonna get, because each of those EIN numbers or each of those names is going to get us a different 1099 in most cases.
In most cases, yeah. So be cautious with that. If you see a vendor that's changing, send a W-9 just to confirm their EIN changed or didn't change, and then go from there.
And then she just added on, and you may be getting to this, but is there a best practice for making clients or vendors inactive?
Sure, we can talk about that as well. Really, if you think back to what Emily talked about with the employees, it's kind of the same thing. We'll go in here to Google, let's say, and simply drop down box, make inactive. That's the easiest way to do that.
Deb, since you're there, if you look right below, it does say merge contacts.
Mhm.
So if you pick that, it'll allow you to pick what contact you want to merge into that current one that you're in.
Okay.
So I think that's a fairly new feature in online. You still have to do the copy and paste of the name and desktop, but online you can choose which you want to merge.
So instead of copying SEK, CP, and advisors and going into Smith Elliott Kearns, you could simply come in here and choose the one and then choose the other one.
Yes, so you want to do, so this one looks like you're merging from Google into the other company. So you'll just want to make sure if you are using this that you are merging it into and from the correct choices here.
So making the vendor or customer inactive, kind of the same. Are you sure you want to make them inactive? Yes. And then they are inactive and they're gone from your list. However, let me see here. If I go back to vendors and Google is not there, but I can click this gear icon over here, settings, and I can include inactive, and then they would show up there as well as deleted. I don't like how QuickBooks Online uses the word deleted. They have since the beginning of time, I think. It's not deleted, it's still there. It's just the wording that they have. And that would be the same for customers as well.
And maybe as far as when you're making the clients or vendors inactive, again, I feel like that's kind of a company preference. If it's something you haven't used in a few years, you can make it inactive. Or if it's a company that went out of business and you're never going to use them again, you can make them inactive. Yeah, so it really kind of depends on your company and what your policy is. But yeah, just keeping that kind of cleaned up.
Yeah. It helps too when you're searching, when you're entering an activity, you don't have this long list of customers or vendors to scroll down through. Okay. Streamlining your chart of accounts. Also another important cleanup thing that you want to make sure that you're doing every so often, merging similar accounts, consolidating duplicate accounts. It just makes things clearer when you're running your reports. It allows you to, when you are entering in expenses, to not have to think every time, should it be office supplies or office expenses? Should it be postage or office supplies? So again, the chart of accounts is specific to you and how you want it to be set up, but just try and make sure that it's clean. It's just much easier for you to view your reports and for us as accountants to review as well. We can also look at deactivating inactive accounts that haven't been used in years. Sometimes this comes into play when you're a nonprofit and you want to specifically show an expense for an event that you have. and you never have that event again. So you want to make sure that you're making those accounts inactive, so they're not muddying up the waters, if you will. And again, just regular reviews to keep things organized and efficient. So let's go back to QuickBooks here, and I will show you in the chart of accounts again. Sorry, I can't keep switching back and forth here. Same thing, desktop, QuickBooks Online just looks different. For QuickBooks Online, up here in the settings as well, and your chart of accounts, QuickBooks is going to be company at the very top in chart of accounts. So really just a review. I'm gonna give myself a little more room here by clicking that button there. So really just start at the top, right? What is this checking account? Oh, this was an old bank account. You know, I switched banks back in, 2012 or whatever the case may be, and my balance is 0. I don't want to see that anymore. You can simply just make it inactive. This will also reduce your usage with your subscriptions, and online you have a specific number of accounts that you can have. So that will free up space for another one if you need it. So simply just making it inactive. I do recommend though, this balance should be 0. Don't make it inactive if it's not 0. If it's not 0, then we got to go back and look at something because that means you haven't reconciled your account because you wouldn't have been able to close it at the bank if it wasn't 0. So keep that in mind too. I'm going to make that inactive, deactivate this account. Yes. And then basically it goes away from our listing, but it is always there to show if you would like to see it in the future. Let's keep scrolling down here. Yep, I know I have these accounts, receivable, inventory. This is all good as we're going down through here. Payroll stuff should always be what it is in QuickBooks. You could have several liability accounts. Maybe you want to talk about merging them. I suggest reaching out if you want to do that because they are tied to processing the payroll checks. Scrolling down, here's a truck loan. If this was a 0 balance, you paid it off. Again, another reason to make it inactive, or even just looking at it, why should that even be there? And if we scroll down to the expenses, where I think a lot of times this comes into play. For example, as I'm looking down through, I have auto expense and I have gas. Do I really need to differentiate my gasoline and my auto expense? And you might even think this gas could be a utility. Well, if it is, then you need to move it down to utilities. So here is where you can, again, and I don't know, I'm just looking to see if they had the same merge option that the vendors and customers do. But again, I would do the same thing. I would, and sometimes you can even copy right from here. And if I come in here to gas and I paste that in here, it's saying, it's going to give you a highlight here saying, oh, you have 2. You say save. And then it says another account of a different detail is already using this. And let me close that because the types are not matching. So they both have to be the same type. So auto expense, if I edit this, is auto expense. And if I go into gas and I edit this, this needs to be auto expense. And I need to, at that point, put in auto expense and save. And now I'm getting the message that you already have an account with that name type. Would you like to merge the 2? And you can say yes, merge them. And then it will have your one auto expense for you. And if we scroll down to the expenses, we have our auto expense and our gas is no longer there. Another frequent one is your office expense, office supplies. So again, you don't need to pick which one you want and merge the 2 together there. You can look here like what is this? Is it miscellaneous expense? So merge the two together. So just things like that to look for.
Deb, a question for those who use account numbers. Once inactive, can you use the same account number for a new account? Example, a bank account with 0 balance and you have a new bank account that needs to be set up.
I don't know that answer off the top of my head. Do either any of you know that?
I know in desktop you cannot. Like
Okay.
even if there was an inactive 101,
Mhm.
you cannot use 101 if there's an inactive account.
Yeah,
QuickBooks Online,
I
I
don't
don't know.
think that you can. Usually if I'm gonna make an account inactive and I want to use that same account number, I'll just clear out the account number of the old one before I make it inactive.
Mhm.
And that way you can reuse that number.
Yeah. So
Fun little workaround there.
yeah, that is a workaround. Yeah, just take off the account number in the old one and use it. But it could get confusing, right? So I think I would suggest using a different account number for any new accounts.
Mhm.
Especially
If you pull comparison reports.
right, exactly. Anything else question wise for chart of account cleanup?
Not yet.
I just
Alright.
wanted to mention something about when you're trying to make accounts inactive. There are certain accounts in QuickBooks Online that you're not able to make inactive because they're either tied to a service item or there's something that QuickBooks uses in the bank feeds. A lot of those like uncategorized, that tax holding account, some of those. So if you try to make something inactive, it should usually give you a reason why it's not letting you make it inactive. But there are some that are like the default accounts that QuickBooks Online will not let you make inactive.
Right. Here's an example. I tried to make uncategorized asset inactive and it looked like it was going to let me, but it says it wasn't deactivated. It does have a 0 balance, but it is a default account for your chart of accounts and it will not allow you to do that. Let's move on then to financial review steps. So this is something that I recommend doing not just at the end of the year, but throughout the year, right? Every month, even if you don't have to, present reports to a board or to anybody else, the owner, whatever the case may be. It's just good practice to making sure that you're reviewing your profit and loss report, your balance sheet. Look at the changes, are there unusual trends that are happening? QuickBooks Desktop and Online has the ability to view comparative reports, right? You can view month-to-month comparative reports, you can view prior year, and it'll actually, really point out the differences in those accounts from period to period. We also want to focus on accounts like miscellaneous, ask my accountant, client inquiry, things like that. Because if you think about it, at the end of the day, when we go to file your tax return or you do, miscellaneous should be in a bucket, right? It should go somewhere. So we should try and really make sure that we're putting things in the right place or at least making memos. So if it does come into question, if you're using one of those miscellaneous accounts, that it's a trigger to view that memo and remind you of what it was really for. And also we want to pay attention to, major variances and loan and interest balances, loan balances, negative balances where there shouldn't be. So again, just some reminders to review those reports and make sure that, things are where they're supposed to be. So I'll take a peek here in QuickBooks Online at the standard report. I normally always start with profit and loss. It's just my thing. It's what I do. At the end of the month, I will go in and you can run this whatever time period you're looking for. We have the whole year of 2025 here. So coming down through, again, just going line by line. Why is there uncategorized income in here? That should definitely not be. It should be a flag to you. You guys know your business and know your income and expense account, so you would know that that's something that's strange. So if I click on that, it will take me to the transaction, and actually, maybe it was a question that I had that I wasn't sure where to post it to, so I just put it into uncategorized income, but I do have a description on here that was for the loan that I received. So obviously loans are not income. So this is something that now if you have the question or you've reached out to your accountant and now you know where to place it. Now we can actually change it. Again, we're reviewing this on a monthly basis, quarterly basis in the same year. So it's okay to change this transaction. We're not changing an amount. So if we've already reconciled the account, that means we're not changing anything on the reconciliation either. We're specifically just changing the account. And I want to go down here to see if I have that loan set up, which I don't have it set up. So I simply from here went to add a new, and this is going to be bank loan or whatever you want to call it. I do suggest, I don't know if you noticed in the chart of accounts, I always like to associate any checking, savings, credit card, or loan with account numbers, whether it's the last 4 digits, the last 3 digits, however you want. It really just makes it easier than saying like ACMB checking, ACMB savings, especially if you have more than one. So I'm just adding my loan in here. Okay. Current liability, and this is a loan payable, and I'm going to save it. So again, I'm on the fly, I'm working in this transaction. I removed it from uncategorized income to my loan. And if I go back to my summary report on my profit and loss, that $500 is no longer there, and I know that it's recorded correctly. Again, we're just going down through the listing to make sure there's nothing weird. Here's $500 in miscellaneous expense. We should be looking at that because we truly shouldn't have any miscellaneous expenses. So if I click on that transaction to see what that was for, I had a question, right? I got to talk to John about this new equipment. Should it be a fixed asset, or is it something that I can simply write off? And again, at that point, after I have that conversation with John, if you will, we can come in here and we can change that because he said, nope, that is just part of your business. It's nothing we need to amortize or depreciate over time. So it's just going to be an office expense. So we can save and close that, or we can choose the fixed asset if needed. Go back to our report, and our miscellaneous expense is gone. So, and that's kind of how I go down through the profit and loss to make sure things are good. Take a quick glance at that. The next step that I do, actually, just to get some more tips, is I will click on the total expense tab. And once I do that, that's going to bring up all the detail for whatever time period you're looking at. And it's going to separate all of the transactions into each expense account. And I can simply go down through here and say, all right, here's Redders. Yep, that was an auto expense. Wait, First Energy, that's not an auto expense. That should be under utilities. So again, simply coming in here and changing it is the easiest way to move things around. Again, I'm in a current period. I know that changing this isn't going to change my reconciliations or affect any reports from before. And then again, we can simply, when this comes back here, it's going to auto refresh this report. And Redders is now the only auto expense, and I can see that down here, it moved it down here. So again, you're really just going down through and just kind of making sure that things are in order. I just clicked the column for memo or description, and what that does is it puts the memo description in alphabetical order. You can do the same thing with the name column, which I find easier if you have tons of transactions. The order of your accounts is a little different. A is not up at the top, but it puts all repairs and maintenance, and then you can look down through and make sure things are in the right account. That's really nice to do when you have tons of transactions. Back to the summary report. Again, just kind of review that and make sure everything else looks good. If you're good with that, the next report that I recommend reviewing is your balance sheet. This is something that, again, you just want to go over every month. Think about where the accounts are coming from. We have our assets, which are our checking accounts. I know I've reconciled them, right? My receivables, I've already looked at my receivables report. I know that's right, and it ties to the aging. Inventory is what it is. Undeposited funds is an account. If there's something in there, that usually means you just haven't taken that money to the bank yet. If that gets out of hand or it's a negative, you want to make sure you're looking at it, obviously. Depreciation, something that's booked sometimes at year end, sometimes throughout the year. So that is kind of something you can, I don't want to say skip over, but if you have questions about it, certainly reach out. Going down through my liabilities, I know my payables is correct because we looked at that earlier. Here's my Capital One card. I know I've reconciled that. That one's good. And then we get to the bank loan. Well, I know my bank loan is $500, but I thought that I had interest on that loan. So if this was December 31st and let's do this with the truck loan instead of the bank loan because that was already established. If I get my statement for the end of the year from my auto company and it says that my statement balance is $4,000 $5,000, but my balance here says 4,900. That means that I haven't booked the interest on the payments that I have made. So that's something that you definitely want to make sure that you're doing when you are making a payment on a loan. Obviously, there's normally interest. So when you're making your payment to them, you want to make sure that you're splitting that principal and interest. And it is just as simple as looking at your statement or going online to see what that was and splitting that. So if the payment was $95 and your interest was $5, totals your $100 payment, and we can save and close that. And then that will get my actual loan balance on my balance sheet to match my year-end statement. So definitely something that we look at when we're doing taxes. So definitely something for you to consider doing as you're making those payments to try and split that principal and interest out on those recordings, on those transactions. So I've looked down through here. Yep, I know I have some sales tax I have to pay. That's good. And we get down to the equity section. Open balance equity should always be zero. A lot of times when you're setting up a QuickBooks file or you're entering in, I think, some inventory or things like that, in the background, transactions will be posted to open balance equity. They really just need to be journal entered out to split between whatever equity partners you may have or your retained earnings, whatever the case may be. So if you have questions about open balance equity, reach out. It should be a zero balance, but only because it gets moved down into one of these other equity buckets. One other thing to consider too in your equity section, your owner contributions, owner distributions. I'm not sure, I don't have any distributions on here, but for the sake of trying to walk through this, let's say this did say owner contributions. One thing that we want to do is we want to make sure this isn't, you know, from the beginning of time, your distributions, to be consistent and to have good reports. We always want to close that distribution account out every year. So you can kind of have an idea of, okay, this is how much I took in distributions this year. Again, this is only one transaction in here, but we will be able to do a journal entry that says, okay, last year I took $40,000 out. I'm just going to move that down here to my retained earnings because it's from a prior year. So again, that's kind of a year-end adjustment that we do, but if you have questions about it, we can certainly talk through it if that's your case. And then the final thing down here is your net income. If you don't know, your net income number actually comes from your profit and loss statement. So 21,939 is the net income on my balance sheet. And if I were to go over to my profit and loss report for the same time period, the year that I'm looking at, my net income or net loss, 21,939, it matches and we are good to go. So that's kind of the gist of looking at your balance sheet and P&L on a reoccurring basis, just to make sure things are clean, make sure things are in the right place. The other thing I talked about doing was viewing comparative reports. You can run just a profit and loss, which is where we are right now. There is a compare button here that you can choose. I want to compare this year to prior year, and I want you to show me the change, and I want you to show me the percentage of the change that's happening. this really allows you to get into like the weeds of it, I guess, and see what's going on. For example, this is going to be my 2025 year in the first column, 24 in the second. And I can see quickly by looking down through here, whoa, there was an increase. What's going on? Oh, that's right. I did a big repair job. Makes sense. So just things that kind of will stick out to you in that way. Here we can see that our electric bill went down from last year. So that's a good thing. Just gives you a little bit more information to be able to run these comparative reports. Again, they are available in desktop and in QuickBooks Online. And they are specific ones in here that you can run. Here's a profit and loss comparison. So I didn't have to go in and click that button. It just automatically will bring that up for you. Another thing that I suggest now that I'm in here, your favorites will be at the top. And you can simply star it and it will put it on the top for you. Desktop, I'm not sure that you can do that in desktop. Is that right? Do you have a favorite? Is there a favorites option? It's been a while since I've been in desktop.
You can create a favorite list report.
Perfect. Yeah. And then I think it's
Memorized
also
reports.
memorized reports, right?
Yeah.
Yep. So yeah, I mean that's what I have for financial review. Does anybody else have any input for reviewing financial statements, or are there any questions out there? Okay. The next slide that I have is a very important slide. We want to talk about setting closing dates. We talked before about, having duplicate transactions in, or maybe changing something from a prior period. This will help for sure, and making sure that that doesn't happen. So I think it's wise for every business, township, borough, whatever type of business that you are, to establish, firm closing dates. So if you set your closing date in QuickBooks, let's say after I reconcile my accounts, I'm setting my closing date. Or after I file my sales tax, I'm setting my closing date. So it's good to have those policies in place to make sure that history isn't changing accidentally, because I know it happens sometimes. Obviously, if you have other staff that you're working with, you need to communicate these closing date procedures with them, because what's going to happen is when you set that closing date and someone tries to change something, they're going to get a message. And a lot of times it'll be frustrating. I know I need to change this, but I can't change it. Well, there's a reason why you shouldn't be changing it. And that's when you have to reach out. So it definitely helps in that regard. And again, consistently setting those closing dates keeps your books clean. So again, setting a closing date after your bank reconciliation and or after your sales tax is filed. Biggest one is when you send that file to your accountant for taxes, for your audit, whatever the case may be, you set that closing date as soon as you send it, because what the accountant has is what's going to be filed on the return. If you're going back and making changes, we don't have the current copy. So very important to do that. And I will show you in online where to do that. Again, up under the settings and account and settings. And for this one, we're going to go back to the advanced tab. And in this accounting section here, it's going to say close the books. If you toggle to the on switch here, it's going to ask, when do you want the books to be closed? I'm just going to choose, I'll choose September 30th since we've reconciled all of our accounts. You also get the option here to enter in a password if you absolutely should be changing it. A lot of times you shouldn't be, but it allows you to change after viewing a warning. There's also an option that allows change after viewing a warning and entering a password. So in the case where, maybe you have multiple staff under you and you want to make sure that nobody's changing it, if you want to set a password, you can certainly set a password and don't give it to anybody, right? Like, because they would have to come to you they wouldn't be able to just view a warning and then still make the change. So I highly recommend using the password, even for yourself, right? I know we all get busy, and if we're going through and we go back and we change something and we get the warning and it's like, hey, this is a closed period, you shouldn't be doing this, and you're like, okay, I got to get this done. Having that password field pop up again after that and having to physically enter that in, I think will stop you and make you really think like, should I really be changing this? So I do highly recommend doing this with a password. The password can be whatever you make it. And again, you just have to remember what it is, obviously. And
share it with your accountant.
And share it with your accountant, right? Exactly. So
That's what I was thinking. The only time that I can think of that anybody would need to use it would be when you get your adjusting journal entries from your accountant after your tax return.
That makes sense. So that's how you set that closing date and password in QuickBooks Online. I don't have a desktop version up, but I know it is under Edit, Preferences, and then I believe it's Accounting, and then the Company tab is where you want to go to set that closing date. It's the same thing. You need to choose your closing date, and you can enter in a password for that change.
Deb, a question that just came in. How would QBO handle a voided check from a prior month if I close that period? Will the entry be on the current month or backdated to the original date of the check?
Again, if somebody had time to think about that as you were reading through it.
I was just going to say, how about we set a closing date and try it? Because I'm not 100% sure.
Well, anytime you void anything, it's going to change the data as of the date of the transaction. So if you have a closing date set, it's probably going to give you that message that says you have a closing date. It's going to make you put in the password.
That's what I was thinking it was going to do. Yeah.
Feel like sometimes at least QuickBooks Desktop handles this correctly and sometimes it does not, because it will sometimes give you a warning that you're changing something from a prior period and ask you if you want it to create the journal entry, but then it doesn't always do that. So
I'm pretty sure it's going to tell you that you need a closing password to void the check, but I'm not 100% sure.
Yep. I mean, it's definitely going to ask for the password, but what it does when I say yes, change it, I'm not sure. So
it should void it as of that payment date.
Okay.
Like it'll change the September financials, even though we're in November.
So here's this first energy check. I set the closing date for October 31st. Here's this old check, right, that we paid twice. It was a bill and a check. So if I go in here to void this, the transaction will stay in your books, but the amount will go to 0. Void transaction. The transaction was on or before your company's closing date. Voiding the transaction will affect your books. Do you want to continue? And if I say yes, it voided it from the prior period and just turned it to 0. So that would have changed the reporting, which is what we don't want to happen. So again, it's something to really think about when you're voiding something or changing something from a prior period. Yes, you can do it, but should you really do it? In this scenario, probably a journal entry would have been best to void that check. Debit your checking account to increase your checking, and your electric would be your credit for your expense. I do know in desktop, again, like Mandy said, like sometimes it does work. A lot of times it will pop up and say, this is from a prior period. Do you want me to make the adjustment now? That is truly what you want. And in that case, the desktop version will do an entry for you instead of you having to physically do the entry. Maybe that's some feedback we should give to QuickBooks Online. Any other questions?
Deb, there was one question in there about if you'll be able to share the slides after we're done today.
I can, yes, I will see to it that they are shared. Yeah, I'm not sure if I make a note for that. That is all that I have for the cleaning up your general ledger. Does anybody have any specific questions? I do know that there was one that was entered on the registration about due to, due froms. And I will say that is very specific. And it's not something that I feel like we should go into right now because it is so specific. So whoever asked that question, if you want to reach out to your CRM or your contact at SEK, they can certainly go over that with you. Sorry. Okay. If nobody else has any questions, I just want to share our contact information here with everybody. Our email addresses are here. Also, don't hesitate to reach out to us. We do have on our website the upcoming events that Kendra had talked about at the beginning. So if anybody has any other questions or issues, comments.